What's up traders, welcome to Failure to Displace. In this video we're going to take a look at today's London session on EURUSD. Today I'm going to be using the exact step-by-step model I shared with you in yesterday's video. There was an opportunity to bag a really nice 4.9R profit after a failure to displace below the Asia low. This setup literally repeats itself over and over again and has transformed my trading this past month. If you've not checked out yesterday's video, then be sure to give it a look after this one. However, I am going to walk you through the process again right here. So let's jump into the analysis now and see the steps that I've taken to identify this pretty epic setup. As always, we'll start off our analysis on the 15-minute time frame. We're going to be using our session liquidity tracker to show us untapped levels of session liquidity in the form of these extended green lines. When liquidity is swept, these will turn into these little red lines. Links to all of the indicators that I use, including the session liquidity tracker, are down in the description box below, along with a quick video showing all of my settings. So if you want to replicate my chart, then head on down there for more details. We can see in today's price action, we had a strong bullish move yesterday prior to red folder news, creating this kind of seek and destroy pattern, and we're currently pulling back into the range. These larger orange sections are overlapping new week opening gaps, so it's interesting to see that we are consolidating within those. Asia has displaced a little bit lower, so we can see we've got a fair value gap and we have swept the New York PM session high. We'll be entering our trading window at 1 AM. You can see we're currently closing back inside the New York PM session range here. So this 15-minute fair value gap is just something to be aware of. You can see going into this 15-minute fair value gap, we do have relative equal highs here, so there's a little bit of buy-side liquidity there. In the form of inefficiencies from the downside, the only fair value gaps are below the New York AM session. However, we do have these large wicks to be aware of, so we could potentially sweep liquidity into these wicks. ICT often refers to consequent encroachment of the wicks, which is the 50% level of these extended wicks. We can treat these as essentially fair value gaps or inefficiencies in the market. We'll use this lower one as a potential reference point, so perhaps price will dig down and we can just see if we get any kind of reaction around 50% of this wick area. I'm doing the last bearish wick as my reference. And based on this, let's have a look from yesterday's high to yesterday's low, or yesterday's low even, which was put in London session. Let's just pull a fib from high to low. See where we end up in reference to an optimal trade entry. On the daily range, funnily enough, the optimal trade entry, which is our 618 area, is exactly at this 50% consequent encroachment of the wick. If we use this bullish wick, let's just see. So the large bullish wick, which is the larger of the two wicks, takes us more or less straight to the optimal trade entry. And so that's quite significant confluence there. We've got a couple of things lining up at that point. So we're going to start monitoring price from 1 AM. This is the open of a brand new 4-hour candle. There can often be an injection of volume at this point. The actual trading window for the London session doesn't officially start while 2. However, I do like to come and monitor price action from 1 because we can sometimes get nice entries prior to the actual kill zone opening up at 2 AM. So I'm going to drop onto the 5-minute time frame, and what I'm looking for a sweep of liquidity. So essentially we could potentially sweep the high and look to run the lows, so continue to reverse all of this price action from yesterday's news drop, or we could sweep the low and then target these relative equal highs that we've got into this fair value gap. So either way, I'm open to longs or shorts depending on which direction London wants to drive price. Let's start skipping forward now. We'll kind of consolidate it a little bit. We've had a pump up, taken some liquidity here, and now we're driving lower. So my eyes are on the Asia session low as a potential sweep of liquidity. We're coming into 2 AM now, so this is the official open of the London kill zone. And there we've taken the Asia session low. We are into our consequent encroachment of that larger wick that we highlighted, and optimal trade entry is just below us as well. Also lining up with that is the bottom of this new week opening gap we can see. I'm going to drop onto the 1 minute as we have swept liquidity now. So we've taken the Asia low, so we can now drop to the 1 minute and look for our potential reversal pattern. At the moment we've just got strong displacement lower, so we're going to be looking for some of these PD arrays to begin failing to give us a confluence that the sell program has finished, and we can now jump on a long position in line with a buy program. So price is continuing down. We're into 221, so 230 is a key time when we're going to be looking at. So as you'll know from previous videos, I like to monitor 15-minute candle opens. So 230, 245, 3 AM. We can see that we do have now some bullish price action. So we've closed through this bearish fair value gap and this bearish fair value gap as well for a breaker block. So our last order block is these two up closed candles here. So we've got quite a large reversal needed before we're going to get a failed order block. We've seen failed fair value gaps potentially acting as inversion fair value gaps, but for a failed order block we're going to be looking at up here. So at 230 we are making another run for the low, potentially sweeping this. Yep, so we'll put in a daily low here. This is quite nice because this moves the goalposts in reference to a breaker block. These last three up closed candles that created this new swing low, these are now our final order block area. So if we see that fail, that will flip into a breaker block, and likewise we can hopefully see, if we get some bullish price action, these bearish fair value gaps begin to fail, where they could potentially flip into inversion fair value gaps. So we're just monitoring. We're putting a new low just after 230, so really we're going to be looking at 245 now. Try and synchronize our entry with the open of the 245 candle. Let's just see if we get any bullish price action here, or if we're just going to continue lower deeper into this consequent encroachment of that longer wick that we identified. So we do get a strong reaction just coming into look 245 here. This is quite nice to see. This order block has now failed. We've closed through it. So that there is now a breaker block. We have failed fair value gaps. So we've filled these bearish fair value gaps in, potentially act now as inversion fair value gaps. So we've got a bearish fair value gap at this point, which has failed. We can mark that as an IFVG. We also have a smaller one here, which we've traded straight through. Sorry, that's the wrong tool on that one. Not as significant, but a smaller IFVG. Let's see if we leave a bullish fair value gap as well, which we do. So at 244, we now have a large bullish fair value gap. So that's the gap between candle 1, candle 2 and candle 3. So this gap between these two candles where there's no overlap is our bullish fair value gap. So this bullish fair value gap is obviously occurring inside this breaker block that we've identified, so this failed order block. So that's the unicorn entry, a fair value gap within a breaker block. We also have additional confluence of these inversion fair value gaps. So we can see bearish fair value gaps have been traded through, and would you believe it, we are coming into a new 15-minute candle as well. So we're just about to open to 245. So my entry for this will be at the top of the breaker block. I like to take entries on the failed PD arrays, so I will enter at the top of the breaker block. My stop loss would be below this low. So this is the first candle of the large fair value gap we've created. The breaker block allows us to account for these inversion fair value gaps as well, and we do have an order block inside this area in the form of this bearish candle here. So we've got several PD arrays now all within our stop loss area, so these should act as support. If we start closing through these, then we want to be out of the trade because we are seeking lower prices. We have potentially built relative equal lows here. I mean, we did sweep this low for liquidity and are now pulling away aggressively, but you could view these as relative equal lows. So if we are on the wrong side of the market, we need our stop loss to do its job as quickly as possible, and I would say that if we disregard these inversion fair value gaps, disregard this big large bullish fair value gap, disregard the breaker block, and disregard this order block, then we are definitely going lower. So we want to be out of the trade at this point. So my stop loss will be just below there, and I'm hoping to get tagged into this trade around 245, 246 kind of time, so into the open of this new candle, and then we will be looking for a first take profit, low hanging fruit take profit, which is all very clearly these swing highs here. So the low hanging fruit take profit is anything above 1 to 1. So that's buy side liquidity there. That's at 1.76. So I'll take probably 70 or 80% of the trade off at this point. And then we've already identified these relative equal highs, buy side liquidity into a fair value gap. That will be my take profit 2 for 3R. So let's just see if we get tabbed in on this at the open of this new 15-minute candle. So there it is. That's the first candle of the 245. Open, pulling in. So we're respecting the breaker block. It's not as aggressive reaction as I would have liked, but we are still respecting the breaker block at this point. And we now drive towards take profit 1. That's good. Just prior to the silver bullet hour, so 3 AM. Not quite hit TP1 there. So we're pulling back. So we haven't adjusted stop loss at this point. TP1 is just sweeping this high. And there we go. So the open 303, we come back into the fair value gap breaker block for a second tap and then take out. So this is TP1. 80% of the trade closed at this point. I didn't like that pullback. So the majority of the trade is now taken off the table. Stop loss is staying where it is. So I'm not going to adjust the stop loss just in case price does want to come back and rebalance some of these inefficiencies that we've left down here. But ultimately, I'm expecting these relative equal highs to get taken and potentially rebalance this 15-minute fair value gap. I believe we are in a buy program now, so I am feeling bullish. I'll close the trade out in full at this point. However, logic would say that Asia high is a very good target. We've swept Asia low, we've pulled back inside the range, so you would expect to target the opposing side of the range, which would be the Asia high. I plan to close out in full at these relative equal highs, however. So we'll skip through price now. You can see it digging back into our entry, so this is why I don't like to move my stop loss. Back in a little bit deeper. So we're just consolidating in this range, building liquidity here. What we can see is we do have now relative equal highs up here that we've engineered. We've got a little bit of a draw on liquidity at this point, so that shows that we should come higher still. Now we've just swept relative equal lows in our stop loss area. So from our entry, we had these kind of relative equal lows here that we've just swept. So we've swept some liquidity, dug deeper in rebalancing the fair value gap, rebalancing the inversion fair value gap as well. Did we tap that inversion? We didn't tap that one. But at this point, it's just a case of remaining calm. The trade is still valid. We are not closing through the highlighted levels of resistance that we, or levels of support even, that we identified. Look at the significance of the peaks as well that we're getting. So the retracement is 333. So again, the open of a 15-minute candle will get some more volume coming into the market. $45, we're putting another peak and we're pushing up. So we're coming into 4 AM now, open of the new hourly candle. So hopefully we'll get an injection of volume into the new hourly candle at 4 AM. So we've basically engineered highs, engineered lows here. So we're building a box of liquidity. Coming into 4 AM, sweep of the liquidity, and then hopefully go higher is what I'm anticipating. And then leaving these lows all intact. And there's the move. So we're coming into the new hourly candle. Not actually swept that low, but we have swept these relative equal lows in here. We did have a little bit of liquidity at this point. Swept the lows, aggressively moving away, open of the new hourly candle at 4. Respecting this bullish fair value gap. And now accelerating away into the take profit that we identified. So it's just literally smashed straight through. So there's really not an opportunity to close there. It's gone through so fast. Eyes are on the Asia high. Let this run. So this could potentially be an inversion fair value gap now. So this was a 15-minute fair value gap, if you remember. Liquidity into it. We've traded straight through, which means the price potentially has traded through this. It could act as support now instead of resistance. So we'll come back, retest the 50%, and then go for the Asia high. So that would be a logical analysis of this move. And it has. So there you go. It's taken the high. Traded through the 15-minute fair value gap. It acts as support instead of resistance. And then we go for the Asia high, bagging 4.9R. Really solid trade. So you can see that there was a lot of back and forth here. We did enter a trade into consolidation. Having the low hanging fruit as a TP1 takes the stress off. And we can let the trade do what it needs to do. We had several layers of support below us. So these did hold price up as expected. And then the volume came in at 4 AM to take us up and take out Asia high. So really nice session. We can see that this pattern that we've identified, failed PD arrays into a breaker block with overlapping bullish fair value gaps. It repeats itself over and over and over again. I'm seeing this every single day, and if you're just patient waiting for it, synchronizing your entries with the open of 15-minute candles, the hit rate is fantastic. It's really transformed my trading over the past month or so. So I really hope you found that useful. If you did, please give the video a thumbs up. If you've got any questions or comments, please leave them down in the comments section below. It's great to get your feedback. And if you're enjoying the content, want to see more videos like this one, then consider subscribing. Dropping videos more or less every single day, and it would be great to have you on board. Thanks for watching. I'll see you again in the next video.